follow up with. So let's jump into today. So as I mentioned, leading today's discussion and co-emceeing with me, SVP, National Correspondent Sales at Plaza, Selfie Mayer. Hi, Selfie. How are you?
Hello, Tom. I'm great. Thank you.
Well, really appreciate you helping kick things off with me today. And I guess at this point, I want to allow you to introduce our subject matter experts at Plaza on the renovation side that are going to be guiding us through today's discussion.
Yeah, no problem. Sounds good. Well, first off, thank you for co-hosting this with us. We're really excited about doing this webinar. We do these every month for our clients, and it's good to be able to do it jointly with you guys and allow for the members on your side to see as well. So we're really excited about that. So hello, everybody. Thank you to who's on the call for joining us today. We know everyone is busy in this market with all this wonderful volume out there, and so we definitely appreciate your time. So today we're going to be presenting on really one of our long-standing products, the 203K product. You know, it's been with us for many, many years, and we have two great people here who are going to be presenting and doing all the hard work here today on this product. You know, just some background, we actually had to suspend this product temporarily right in the early stages of COVID, but we are super excited to have it back because this is a great staple for us. It's very popular, always has been. And so for us, it was important to remind our clients as well as our prospective clients that we have this program and we're ready to go. We know everybody's busy and there's a lot of volume being out there, but we also know the mortgage industry has lots of ups and downs, and this particular product doesn't really have a lot of ups and downs. It's very consistent. It's not as rate sensitive. It's a high demand. And so we really hope this presentation helps to convince you in the end, when all is said and done and you have any questions answered, that you think to, okay, you know, maybe I should add this to my product menu, and especially when the market kind of slows down, you'll be ready to go and have a product that is very consistent, like I mentioned. So the two presenters here I work with, I have the great pleasure of working with, Reagan Cunningham. She's our National Renovation Construction Manager, as well as Phil Senaway, who works on the National Correspondent side as a underwriter for specialty products. You're going to get the 1-2 punch here today. You're going to have the sales marketing side of things, and you're going to have the operations nitty-gritty side of things here. So I'm really excited for you all to hear it. And without further ado, I will let you guys have the floor. Reagan and Phil, take it away.
Awesome. Thank you, Selfie. And thank you so much for the invite to today's webinar. We're so excited to talk about 203Ks. These are my lifeblood and passion, and I absolutely love talking about 203Ks. And just to tag off of what Selfie said, the 203Ks have actually been around since 1978. So they are a very stable product. We really saw a huge resurgence of them during the market crash, and sort of they started building a little bit of a bad reputation for themselves as they are the too hard to do loan. And over the years and over the 13 years now that we've had these products, we have really mastered the fine art of making a 203K work for our clients and our borrowers. And it just makes me super excited to talk about this product because I love everything that a 203K can do. So let's kick into it and we'll give you some nitty gritty about the 203K. So these are our legal disclaimers. I'm not going to read through those today. I'm going to give you a quick overview of the agenda. We're just going to talk about why renovation has become such an important topic over the last few years. When I started getting into renovation 13 years ago, I was sort of like a lone man on the island, and it has just been fascinating to me to see this huge pickup in renovation over the last 5-10 years, and it just is really exciting to see its growth. We're just going to touch on the guidelines. We're going to just give you a quick overview of the forms. We're not going to dig into those too much. We're going to talk about who the head consultant is in these projects, contractor approval, what it takes to get a bid approved. what's going to happen after the loan has closed. We're going to tie all that information together for you and then give you some great resources that Plaza has available to make you incredibly successful with this product. So why renovation loans? Why have they become such a big deal? I'm sure that you never heard about them, or you heard that they were too hard and you ran away from them. Renovation has become so huge because we know as a country nationwide, remodeling has exploded. As a matter of fact, tonight after work, I have some contractors coming to my house because I'm personally taking on a remodeling project. So we know that remodeling is just speeding up, more so than we have ever seen historically. And those dollars have to come from somewhere. And the 203K is perfect for this. We also know a couple of the driving influences with 203Ks are our aging housing inventory. Our homes are getting older and older and older. So this is just a great slide to kind of target to you what states have the oldest homes. So, but this is part of the influence, but not all of the influence. You'll see like Florida and Texas are still built in the 2000s, but 2000s are now 20 years old. And those are some of our primary lending states. But typically we see a ton of renovation on the East Coast, but we're still very strong in the West Coast and Midwest as well. So we'll take a peek at the next slide so you can see renovation dollars. So this is actually dollars that are spent in the United States on owner-occupied housing. So you can see, and our trends follow this as well. We're exploding in Texas and Florida and along the East Coast because we got all those older homes, but still we have a lot of volume out of California, the West Coast, and even states with smaller amounts spent. This is the amount of remodeling dollars spent that year in that state. You can still see a lot of strength through the Midwest. So it's kind of exciting to see how much is going on and how much actual dollar volume is flowing through these states. And all this screams to me is opportunity for renovation lending. We also know that our millennials are our target audience. I'm hearing back from my originators more than ever that the millennials are doing the research, they're reading about it, they want to do the remodeling, they're searching for money, and they are finding and landing on renovation products. So what I'm hearing from my originators is that they're starting to have millennials actually come to them and asking for the product. It's not really, hey, I have this alternative idea anymore. They're getting requested. So it's really good for you guys to have this tool in your tool belt and be prepared when you get asked those questions and when you have the millennials coming to you. And then also it's, just a great way to stand out. We'll talk a little bit more about that as well, but this is your target audience. We also know that absolutely everything that's been happening on TV over the last 5-6 years, if you've turned on HGTV lately, it's literally just exploded. And really, for the first time ever, borrowers can see right in front of their eyes what remodeling can do. It's kind of funny when you hear about something, it's one thing, but when you actually see it and know that, hey, I really want that, then they're going to go for their remodeling dollars. So we know that this has also had a massive influence on renovation lending. I really like this slide for a couple of reasons. So if you have those millennials or, borrowers coming to you asking for a renovation loan, or they land on this as a good idea for their project, this is just a great informational slide for you. Like if they ask you, where's the best money to spend on my remodeling project? This gives the average job cost and the average cost that's recouped in the value of the property. We know outdoor living has become huge. So look at decks have absolutely just exploded. We always know kitchen and bathroom remodels do well. Additions don't do quite as well, but good information to have in your back pocket. So if you've never, ever touched a renovation loan, you don't know anything about it, what it means is that it's a single loan close. You get all the money for the renovation, as well as the purchase dollars. They're great for refis or purchases, and then everything is always based on what that home is going to be, the as completed appraised value of the home. So that's how a renovation loan works. It's all the dollars tied together in one loan. And this is the slide that got me, excuse me, so passionate about renovation lending. Oh, tickle in my throat. This is what made me so passionate about renovation lending 13 years ago. It absolutely just blew my mind how every party in the transaction was radically influenced by this product. And there's really no other product out there in the market that can do what renovation lending can do. For our borrowers, it gives them the opportunity to look at a wider variety home. Maybe they're absolutely set on a certain school district or certain neighborhood, and they can start to look at homes that are in their price range but need to be fixed up. They can add equity to the home. We see a lot of first-time home buyers on 203K, but it's absolutely not a requirement. And giving them the dollars to, let's say, take care of the remodel. Maybe they don't even have appliances for the project. You can roll in washer, dryer, dishwasher, and get them set up to have this great home without having to get in there and do a HELOC or a credit card. For our real estate partners, it's just a great talking point. It's a new stream of business. It gives them an ability to overcome objections. It gives them the ability to provide their borrowers with more options, just not having to say no and giving them another tool in the tool belt. It's still shocking to me after all these years how many real estate agents don't even know about renovation lending, which is just an amazing opportunity for you, for networking, for standing out and being able to train your partner, to help your partners with their test listings, becoming a renovation brand expert. And a lot of people still have the misunderstanding that you don't get paid on these loans until after the construction's done, and that's absolutely not true. You get paid on it like you would any of your other loans. They close and then we take over. So it's going to pay you like any of your other loans will pay you. This slide, I just popped it in here really quick because it's just kind of exciting to see. These are actually 6 live Plaza home mortgage scenarios that these actually really happened. So this is what they paid for the sales price. That was the repairs. That was the after improved value. So the second their remodeling project is done, that was instant equity that they had in their property. And you, as an originator, is an amazing gift for you to be able to give your borrowers. And trust me, they turn into the most amazing referral sources for you when they're so well positioned in their newly remodeled home. So just another tool and sales tip. I can tell you I've looked at thousands of renovation loans. It doesn't happen every single time, but more often than not, it absolutely does. So we're just going to touch on the guidelines today because we don't have a ton of time, but we can absolutely always make those available to you to read through. 203Ks are available on a 30-year, owner-occupied only. There's a lot of down payment assistance and energy programs that you can partner with it for additional dollars. The structure always has to be complete for a minimum of a year, and 640 is your minimum credit score. The 203K comes in 2 different programs. There's the standard, which I often call the big boy, and then there's the limited, which is the abbreviated version. The standard works much more like a construction loan, where you do work, you get draw. You do work, get a draw. And you can have up to 5 draws on a standard K. The limited K is capped at $35,000, but you want to be careful because you have to take all your fees out of that. So it's really about $30,900, and you get paid half of that at closing. They do the work, and then they get paid the other half. Construction always needs to begin right away because we only have 6 months to do the work. You want to be careful that your borrowers aren't displaced on limited K for more than 15 days. So you'll have to look at the type of work that's happening. I am a personal huge fan of the standard K. It just kind of gives you more options. You don't have to worry about structural repairs, and you have that HUD consultant to be a partner with you throughout the project. And we'll talk more about that as we move along here. Property eligibility, single family, PUDs, condos. We now allow manufactured homes. We just added that to our arsenal last year. There is a contingency fund associated. This is like an added insurance policy for your borrowers. So we have some money set aside in case something happens during construction. And we've been servicing these loans for a long time now, and we know that more often than not, they need those extra dollars. These are ineligible improvements. The main thing you want to remember is that you cannot do structural repairs on the limited K. On a standard K, you can do everything, all kinds of major additions, add a second story. There is the ability to get some money at closing on a standard K. That's called a materials draw. That's the materials draw, so you can get a little bit of money for materials. This is our TRID grid, which is going to help you set up with all the fees, what's required, what's not required for your project. And I always, this is my longtime saying about not getting intimidated by the 203K. It's just a regular FHA loan with 3 additional pieces. There's the forms, getting your contractor approved, and your bid approved. Here's a list of the forms. As you can see, it's not too long. Those are the forms for submission. Standard has some specific forms. Limited has some specific forms. Then there's some forms that are added to the closing doc set, and those are the forms that servicing department will use to get through construction. There is a 203K calculator that's available on HUD.gov to help you put together your loan amount and get your fees right. We also have bundled all the forms together for you in a 1-pack, so you'll have everything sitting on your desk ready to go. We're going to talk about getting the contractors. We look for license, bond, insurance, and W-9 in a contractor profile report to approve our contractors. We also have a contractor welcome pack, so you don't have to explain the process over and over and over again to the contractors. You can just email this out to them, and they'll know exactly what they need to do to be successful with the 203K. The HUD consultant, you are required to hire a HUD consultant with a standard 203K, and they are a great help through the project. You can find a HUD consultant on HUD.gov. And the contractor bid, we have created a bid template to help you format your bid and get it exactly 203K pre-approved. We do offer self-help. We're one of the only lenders that offers self-help. That means borrower doing their own work. There's some specific versions to it, and we highly recommend you reach out to us if you want to tackle self-help and learn more about the self-help option. And then I'm going to turn it over to Phil for purchasing.
Thanks, Reagan, and thanks again, everyone, for taking the time to join us today. I just wanted to start off by talking about some of the services that we offer, just to make the 203K loan process a little bit easier. The first one is our Reno pre-closing review, and what that is for our delegated clients, they can choose to underwrite the credit, income, and assets themselves, but then they can package up all the renovation documents as far as the contractor approval docs, max loan amount, validation documents, and they can submit those to us prior to the loan closing, and we will review all of that renovation documentation just to make sure everything is in line with what we hope it to be, and that helps to expedite the purchasing process for us and for the borrowers. The key with these 203K loans is to get them purchased as quickly as possible, and that pre-closing review can help to eliminate a lot of those post-closing conditions that could slow down the purchase. the borrowers really want to get that renovation started and have those draws being issued to the contractor. Another service that we offer is a pre-closing CD review, and we can review a CD or an LE just to make sure that all the fees are disclosed in the proper places with the proper payees for the correct amounts. And we put that in place just to eliminate those annoying post-closing CD correction conditions. So we also have our TRID fee matrices out there for our 203K programs, which is another tool to utilize to make sure that those CDs are disclosed correctly. But this pre-closing review is also in place to assist with that. The turn times for those reviews are both posted at 24 hours. This next form, the rollout call outline, there's just a lot of helpful information on this form. You'll see the standard 203K fee matrix on the first and second page. And then on the third and fourth pages, there's just some additional helpful information. It addresses the standard 203K process for disbursements at closing, the limited 203K. There's a list of required forms for the standard and the limited K, and then it also touches on some of our specific overlays. Once the loan is closed and has been purchased by Plaza, that's when it is moved to our draw management team. Our draw management team, they're all Plaza employees, so we don't farm out that draw management process. It's handled internally. And once we've purchased that and have boarded it to our servicing department, they'll place a welcome call to the borrower. They'll let them know how the renovation process is going to work. They'll find out where they'd like their welcome package sent. And that welcome package has a lot of helpful information in it for the borrowers, just explaining how the draw process works. Some similar information to what's in that contractor welcome package, but just another great tool to let the borrowers know who Plaza is and how that draw process will function. So once we have purchased that loan and it's been boarded to our servicing department, for the draw processing, the borrowers would notify our Plaza servicing draw management team when they need a draw inspection. They'll have to package up that draw request and provide it to Plaza. They'll have to provide us with a complete draw request package. And once we receive that, which would include a lien waiver, a draw request, and the inspection, we'll issue a two-party check that's made out to the borrower and contractor. Once again, on those limited 203Ks, 50% of the funds are dispersed at closing, and then the final 50% is just dispersed after all the work is completed. And then on our standard 203K, there can be up to 5 draws, and that's determined by the HUD consultant. For the process flow, this is just kind of a quick overview of how a 203K loan process flows. The big differences from a standard loan process would be at step 3, where you'll see that the borrowers would meet at the property for a standard with the HUD consultant. If it's just a limited K, that would be with the contractor. And step 4, where they would obtain the contractor's bid, the plans and specs, and the work write-up for the standard. Once that's completed, the FHA case number could be assigned, finalize the forms and the contractor approval items, disclose the fees correctly for TRID, and then you would order the appraisal at that point, submit to underwriting. The loan would then go to closing, and once the loan's closed and purchased by Plaza, that's when the renovation would kick in. Once that renovation is completed, a final inspection is finished, and then the loan is closed out. And with that, I will turn it back over to Reagan to cover some of our resources that we offer here at Plaza.
We've really learned a lot over the years about the tools that you need in your tool belt to be successful with 203Ks. So we've created quite a few resources for you to be able to market this product and to feel comfortable tackling a 203K loan. So we have all our underwriting guidelines and forms posted, as well as our renovation forms. That's where you'll locate that one pack that has all the forms bundled together for you. We also have created an incredibly comprehensive submission checklist, and you'll see that it's really broken down by those forms, the contractor, and how you get the draw process together. So just a really good comprehensive checklist to make sure that you have all your bases covered with the 203K. And this is our awesome national correspondent team that's available to you. And that is all we have for today. I will turn it over for questions. We are a huge advocate and we love questions. It is actually sometimes the best part of these kind of webinars. So please don't hesitate to ask anything you're thinking of. There's no such thing as a stupid question. If you're thinking it, someone else is probably thinking it too.
Well, thank you, Reagan, and thank you, Phil, as well. I couldn't have said it better myself. You know, please, any questions that you have just based on, the content both Reagan and Phil have shared today over the 203K offering with Plaza, you can do so via either the chat or Q&A functions. And I'll be able to see those and verbalize those on your behalf. So I do already have a few in the queue here. First off, does Plaza offer any dedicated resources to answer loan scenario specific questions to 203K or other correspondent lending programs?
Phil, do you want to take that one? Yeah.
Yeah, we do. We have a renovation lending help desk that can be reached at natcorrenohelp@plazahomemortgage.com, and that can be utilized for loan scenario questions, live loan issues, even post-closing issues. So anything renovation related can be sent to that email box. Our turn time for responses from that email box is 2 hours, so we really try to get back to you as quickly as we can with any questions that come through. And then for other loan programs, we also just have a NatCor underwriting scenarios email box that can be utilized for any of the other loan program questions.
Excellent, thank you. Another question I have here: do 203K loan programs qualify under Plaza's certified loan program?
Yes, they do.
Excellent, thank you. Another question here. From your experience, are there common missteps that you see either from an originator or a borrower perspective that can prevent 203 loan application from getting closed and funded?
Well, I think for me, one of the most important things is choosing the contractor. I think the borrowers really need to, choose a contractor that's willing to do this renovation loan process with them, because the contractor has to be an active participant. Some of the delays that we see at times are related to the contractors not completing the forms properly or providing a bid that's not structured properly for the program. So that's one of the big things is, the contractor selection, and then just making sure that they take the time to complete those forms completely and accurately.
Perfect. Thank you, Phil. And then just a reminder to our attendees, any questions you have out there can leverage the chat or Q&A box on your Zoom screen, and I'll be able to facilitate those questions out on your behalf. As it looks like we've got a few minutes left here. So feel free to submit those questions now. I've got a couple more in the queue. What's the typical lead time for a lender, say that's not currently selling to Plaza, to get set up with Plaza as a correspondent investor as well, or I guess, in general, and then maybe more specifically to getting up and running on a 203K product offering?
I could take that one as far as new approvals go. We're very quick from the time, as long as the application is complete. It's very simple. It's online. We can send a link along with the account executive code, and the client could keep filling it out as long as you save every page. But yeah, from the minute we get it, if it's a completed application, it takes no more than 72 hours to get a response, and the response would be either you're approved, done, here's your ID logins, or we still need a few more things. But no matter what, we'll get back very quickly. And then as far as the 203K, it's another product that we offer. So we usually like to train clients on it, especially ones who've never done it. And then we get them going. But normally it's the same. You get set up, you become a correspondent, and it's just one of many suite of products that you can do.
Excellent. Thank you, Salpy. And then got another question. I guess I'll direct it your way here. I think it'd be more informative for our attendees on a holistic level working with Plaza. As I know, there's many correspondent investors out there that have a retail lending division, and Plaza specifically doesn't. Maybe if you don't mind taking a brief moment to share what some of the advantages that provides a lender client who's delivering to Plaza.
Well, we don't have a traditional retail in that we don't have, brick and mortar. But, a lot of clients like that, in that we're not competing for the same borrower because we don't have a traditional retail. But overall, as a company, we very much a business to business, wholesale and correspondent. And so we are very familiar with, especially needs of correspondents, because Plaza is an independent mortgage company, has been a correspondent, understands the needs of a correspondent, and is very nimble and flexible. And so, usually we have a opening with all our clients, what is it you need? Because every client's different with their business needs. What is it that you need that we can custom tailor to you? And so that's kind of our big staple in all this, is that we're here for the client. That's actually our slogan, our tagline is here for you, and we really do stand by that. So, and the certified program, which was one of the questions that came up, that's a big part of our staple, in that we help protect our correspondent clients from rep and warranty. And it's tough out there, even though loans are considered clean and good and repurchases are down, people still make mistakes. And those are the kind of things that we cover that is not really out there in the marketplace for investors. So really just being flexible, nimble, and offering this program. And, we do not, as you asked, we do not have a traditional retail program, but really it's all encompassing, and it comes down to the relationship level and the names that earlier came up that Reagan brought up with our correspondent team. Those are our heart and soul, and, we, as clients come to us with questions, we take care of them. And on the 203K especially, we really customize to what the correspondent needs. There's correspondents who don't know how to need it. Who don't know how to close those loans or even start it. We literally handhold you through the whole process. There's correspondents who do know how to do it. They just need to know how we're different. Okay, well, we'll customize to that correspondent. So that's, I think, the big key here is the customization and the flexibility to do business with us, Tom, more than anything else that we offer.
Yeah, it sounds like there's a really consultative process in place when it comes to, getting set up to support 203K and renovation volume that is truly tailored, like you said, to kind of the needs of your client. And, from having a wealth of experience on the Plaza side too, a ton of insight into, how to effectively set up a streamlined process that sounds like it'd be very easy for the lender to adopt.
Absolutely. That's what it's about. And really the success of our client is our success. That's why it's important to talk and know what exactly is needed. And that 203K product is really, it's definitely filled a need for a lot of our clients throughout the years. And, like I said, at the very beginning, when that market, we all know the market will come down. This is a great product. It literally lasts the test of time. I didn't even realize it was that old, Reagan, but it definitely has been around for a long time. So, and we definitely want as many people educated on it as possible so that we're all ready and we can start doing different products than your regular stuff.
No, that's a great point. Maybe we hear that from our members too right now that are obviously drowning in refi volume with the low rate environment, but know that well will eventually dry up as it has in certain cycles in the past too, and starting to think already about what's going to be the offering that they have from a product standpoint on the purchase side that will differentiate them or allow them to capture as much volume as possible when we become heavily dependent again on the purchase side of the business. Well, great. On that note, oh, go ahead.
Sorry, yes, I was going to agree, yes.
Well, I don't have any additional questions in the queue at this point. I want to thank Selfie. I want to thank you for helping me get this discussion set up, and Reagan and Phil for your really outstanding and invaluable insights today for this discussion, and Plaza Home Mortgage as well for the long-standing partnership. And last but not least, each attendee for kind of taking the time out of your busy schedules to join us today. I know how busy everybody is right now. On that note, because I do have a minute here, any final thoughts that from the Plaza side that you'd like to leave with our attendees?
Just get creative with your marketing. Reach out to contractors, reach out to roofers, reach out to your partners. There's a lot of ways to build your business. If you're looking to build your business as the refi drops off, use the 203K creatively. It really gives a lot of avenues for networking. And that's it.
That's awesome. That's a
Yep,
great point.
Definitely. Thanks to everybody again for joining. We definitely know how busy everybody is, so thank you.
Totally agreed. Well, again, thank you guys for leading today's discussion. Very insightful, and for everybody joining. And we'll look forward to catching up soon. Hope everybody has a great rest of your day.
Thank you.
Thank you.